Assalamualaikum, my name is Muhammad Luqman Hakim bin Erizwardi, matrix number 2022-8058. The Singapore and Straits Aerated Water Company was established in 1883 by two visionaries, John Fraser and David Chalmers Neave. The goal of creating this business is to create a carbonated soft beverage. Eventually, this business grew to become Fraser and Neave, FNN, one of the largest food and beverage companies in the area. FNN is in today, it is a listed company in the Bursa Malaysia markets, with the share being 30 ringgit and 50 cent per share. Liquidity ratios are quantitative measures employed to evaluate a company's capacity to fulfill its immediate financial obligation by utilizing the most readily convertible assets. These ratios offer valuable information regarding the financial well-being and immediate ability of a company to meet its financial obligations. Liquidity ratios are essential for creditors and investors as they serve as an indicator to the company's capacity to settle its short-term debts and sustain operations without encountering liquidity issues. A greater ratio often indicates superior liquidity, whereas overly high liquidity ratios may signify that the organization is not effectively utilizing its asset. Current ratio. To calculate current ratio, we must use current asset divided by current liabilities. In the year 2023, the current asset for FNN Berhad is 2,509,107 ringgit, while its current liabilities is 850,567 ringgit. We use the current asset, divide by the current liabilities, and we get 2.94. So the current ratio of Fraser and Neave Holdings Berhad for the year 2023 stands at 2.94. This signifies a robust liquidity position, indicating that the company possesses 2.94 ringgit in current assets for every 1 ringgit of current liabilities. For the year 2022, however, the current asset is 2,239,721 ringgit, while the current liabilities is 883,344 ringgit. We use the current asset to divide the current liabilities, and we got 2.68. Therefore, the current ratio of Fraser and Neave Holdings Berhad for the year 2022 stands at 2.68. The current ratio of 2.68 suggests that FNN Berhad had 2 ringgit and 68 ringgit in current assets for every 1 ringgit of current liabilities. The rise in the current ratio from 2.68 in year 2022 and to 2.94 in 2023 indicates an enhancement in FNN Berhad's liquidity position, implying improved financial management and a greater capacity to fulfill short-term obligations. To calculate cash ratio, we must take cash or cash equivalent and we divided it by current liability. So for the year 2023, FNN Berhad has a cash or cash equivalent to 1,031,534 ringgit, and we divide it by the current liability, which is 850,567 ringgit. So we get the equivalent of 1.21. Therefore, for the cash ratio of 1.21 for FNN Berhad signifies that the company holds 1.21 ringgit in cash and cash equivalents for every 1 ringgit of its current obligations, which is liability. The company's robust cash ratio indicates that it possesses abundant cash reserves to fulfill its immediate financial obligation without having to sell off other assets indicating a high level of liquidity. For the year 2022, however, the cash and cash equivalent for FNN Berhad is 461,887, and the current liability is 833,344. Therefore, after we divided the cash equivalent to the current liability, we got 0.55. So in 2022, FNN Berhad had a cash ratio of 0.55, meaning that they had only 55 cents in cash and cash equivalent for every 1 ringgit of current liabilities. Although sufficient, this reduced cash ratio indicates that the corporation has a smaller amount of readily available cash to meet its short-term obligations compared to 2023. So, the cash ratio of FNN Berhad has experienced a notable rise, increasing from 55 cents in 2022 to 1 ringgit and 21 cents in 2023. This indicates a major enhancement in the company's cash liquidity. This indicates that the company has strengthened its cash reserve, so improving its capacity to handle immediate financial obligations using cash. This is a crucial measure of financial robustness and operational preparedness. To calculate quick ratio, we must use current assets minus inventory and divide it with current liability. So for the year 2023, Fraser and Neef Berhad has 2,509,107 ringgit. We must minus it with the inventory for the year, which is 764,182 ringgit. After we get the number, we divide it with the current liabilities, which is 850,000 ringgit, 567. The quick ratio for the year 2023 for Fraser and Neef Berhad is 2.05. It suggested that that FNN Berhad possesses 2.05 ringgit in easily convertible assets, excluding inventories, for every 1 ringgit of immediate debt. The robust quick ratio indicates that the company is able to easily meet its short-term obligations by utilizing its highly liquid assets, hence strengthening its financial stability. For the year 2022, the current asset for Fraser and Neef is 2,229,721 ringgit, and then we minus that with the inventory for the year, which is 901,377 ringgit. After we get the number, we divide it by the current liabilities, which is 833,344 ringgit. So in 2022, FNN Berhad had a fast ratio of 1.59, meaning that they had 1 ringgit and 59 cents in readily available assets for every 1 ringgit of liability. Although currently in good condition, this ratio is lower than the one observed in 2023, suggesting a relatively less liquid situation.
Next, I would like to present the profitability ratios of FNN. First things first, I'll let you in on the brief introduction of the profitability ratios. So, profitability ratios are defined as the financial indicators that are used to evaluate the capabilities of a company to generate profits, in which they are related to the revenue, assets, operational expenses, and shareholders' equity within a certain period of time. There are 5 elements of the ratios under the profitability ratios, in which I will briefly explain each of them as well as the findings of those elements. And note that each number except for the percentages have 3 extra zeros as per the annual report of the FNN, which indicates that the amounts that I'll be explaining are in millions. So let's get right into the first element of the profitability ratios. So for the first element is the gross profit margin or GPM. So GPM is used to indicate the company's financial stability and efficiency. In order to arrive to the GPM, we must divide the gross profits by the sales or revenues, in which we can simply obtain this information under the statement of profit or loss of the company, and then multiply it by 100% by 100 to get the answer in percentage. So in the year of 2022, after dividing the gross profits of 1,174,092 by the sales of 4,420,163 and multiply it by 100, we get 26.3%. And this means that for every 1 ringgit of sales, FNN generates about 0.263 ringgit or simply 26 cents in gross profit. In the year of 2023, after dividing the gross profits of 1,434,760 by the sales of 5,001,351 and multiply it by 100, we get 28.7% after rounding it off, which it means for every 1 ringgit of sales, FNN generates about 0.287 ringgit or simply 28 cents in gross profit. There is an increase in the GPM where FNN has successfully improved its effectiveness to convert the revenues into gross profit. Some factors that may have caused this is the effective implementation of the passive marketing and the launch of the new products, as well as the successful trades executions and the cost adjustment. Next is the operating profit margin. To get the operating profit, we must first subtract the gross profit with operating expenses during the manufacturing of the products and exclude the interest on debt and the company's taxes. And only then can we divide the operating profit by sales or revenues and multiply it by 100. So in 2022, after dividing the operating profit of 447,941 by the sales of 4,470,163 and multiply it by 100, we get about 10%, which means that for every 1 ringgit of sales, FNN generates 10 cents in operating profits. And in 2023, after dividing the operating profit of 642,942 by the sales of 5,001,351 and multiply it by 100, we get 12.85% rounded off, which means that for every 1 ringgit of sales, FNN generates about 0.1285 ringgit or about 13 cents in operating profit. So there is an increase in OPM where FNN managed to improve its sales after converting it into operating profit. Some factors of this may include the improvement of the operational and cost efficiencies within FNN and the income and profit obtained by exporting its goods to the potential foreign markets. The third element is the net profit margin or NPM. So NPM usually helps to determine whether the company is gaining income from its sales. To arrive to NPM, we must divide the net income or profit of the year by sales and multiply it by 100. For the year 2022, after dividing the net income of 382,269 by the sales of 4,470,163 and multiply it by 100, we get 8.55%. It means that for every 1 ringgit of sales, FNN generates 0.0855 ringgit or about 8 cents in net profit. For the year of 2023, after dividing the net income of 542,028 by the sales of 5,001,351 and multiply it by 100, we get 10.84%, which means that for every 1 ringgit of sales, FNN generates about 10 cents in net profit. From this, we can see that there is an increase in the NPM, where FNN has become more effective and efficient in turning its sales into net profit or income by the year of 2023. One of the possible factors to this increment is the acquisition of the Cocoa Land Holdings Berhad, where it has provided FNN some opportunities to grow its profits by taking advantage of the acquisition's benefits, such as sharing resources and decreased costs in manufacturing and distributions. Next up is the return on assets, or ROA. This is typically a financial indicator that shows how effective a company utilizes its assets in order to generate them into profit. To get ROA, we must first divide the net income or profit of the year by the total sales and then multiply it by 100 for the percentage answer. So, for the year of 2022, after dividing the net income of 382,269 by the total assets of 4,190,630, multiplying it by 100, we get 9.12%. This means that for every 1 ringgit of the assets owned by FNN, it generates about 0.0912 ringgit or 9 cents in profit. Meanwhile, in 2023, after dividing the net income of 542,028 by the total assets of 5,111,617 and multiplying it by 100, we get 10.6%. It means that for every 1 ringgit of the assets owned by FNN, it generates about 0.106 ringgit or at least about 10 cents in profit. From this analysis, there is an increase in the ROA, where FNN has successfully utilized its assets to generate them into profits, hence increasing its income. The increase of ROA may be caused by its strong operational efficiency and also the execution of the efficient cost management methods, as well as utilizing its asset by assigning them to more profitable sections within the company. Last but not least, for me, the return on equity, or ROE, arrives after dividing the net income of the company by the shareholders' equity. In 2022, after dividing the net income of 382,269 by the shareholders' equity of 2,982.5 and multiplied by 100, we get 12.8%, in which this translates to, for every 1 ringgit invested by the shareholders, FNN generates 0.128 ringgit or at least 12 cents in profit. And in 2023, after dividing the net income of 542,028 by the shareholders' equity of 3,343.5 and multiply it by 100, we get 16.2%, in which it means that for every 1 ringgit invested by the shareholders, FNN generates 0.162 ringgit or about 16 cents in profit. So we can see that there is an increase once again in the ROE, where FNN managed to generate its profits from the equity invested by the shareholders. This increment is due to the fact that FNN has likely been improving its way to utilize its assets while attempting to deliver the value of the shareholders. That is all from me for this presentation. I shall pass it to the next presenter.
Hi and Assalamualaikum. My name is Nurhanatika Witikari Nizam. My metric number is 2022-844316. The inventory turnover for F&N Berhad, the company changed its inventory 3.66 times in the year of 2022, which then increased to 4.67 times in 2023. F&N Berhad can manage their inventory because getting a high ratio is important. It shows that the company managed to lower holdings expenses that are associated with the storage and other holding charge. If in 2023 there is a low turnover rate, it suggests that F&N Berhad is either carrying too much inventory, having trouble managing its inventory, or has a low sales. The average collection period or ACP of F&N Berhad in 2022 is 70.74 days, which decreased to 50.06 days in 2023. F&N Berhad managed to shorten the period of average collection period of account receivable to cash. It is one of the six primary formula used to determine a F&N Berhad short-term liquidity or its capacity to settle its debt or current liability on time. The total asset turnover for F&N Berhad in 2022 is 1.07 times before it decreased to 0.98 times in 2023. Higher ratios are generally preferred since they indicate that F&N Berhad is effectively generates sales or revenue from its asset base. A lower ratio suggests that a company may be experiencing internal issues as well as inefficient use of its resource. In 2022, F&N Berhad can turn its account receivable 5.16 times, and in 2023, F&N Berhad be able to increase the turning of its account receivable by 7.0601 times. Murphy 2004 says that the ratio of account receivable turnover for an efficient company is higher than that of an inefficient one. Thus, F&N Berhad managed to increase its ratio in 1 year, showing its efficiency as a company. Because a high turnover ratio for account receivable may be a sign of F&N Berhad effective account receivable collection as well as its high percentage of prompt payment clients. A greater ratio suggests that management is making better use of its fixed asset, according to Canton 2023. F&N Berhad managed to convert its fixed asset 2.83 times in the year of 2022, but in 2023, the company can only convert its fixed asset 2.56 times in a year, which indicates a decrease in its fixed asset turnover.
Thank you, Hani, for the wonderful content just now. Moving on to leverage ratio, it is financial ratio that compares a company's debt to other accounts on its balance sheet, income statement, or cash flow statement. This ratio indicates how the company's asset and business operations are financed, which by debt or equity. That ratio can be calculated by put total debt dividing the total asset. In 2022, F&N company had a debt ratio of approximately 28.8% with total debt amounting to 1,206,241,000 and total assets of Rm 4,190,630,000. This conservative debt ratio indicate a lower reliance on debt financing, suggesting that the company opt up for a stronger equity base to fund its operation and investment, thereby maintaining a lower risk profile and a potentially greater financial stability. By 2023, however, F&N companies debt ratio increased to about 34.4%, with total debt rising to 1,760,016,000 and total assets increasing to 5,111,617,000. This higher debt ratio reflects a shift towards a more leveraged financial structure, indicating that the company used more debt to finance its growth or operational needs. While still within a manageable range, the increased ratio suggests higher financial leverage and greater interest costs. This shift in the debt ratio from 2022 to 2023 highlight F&N companies evolving financing strategy, indicating a balance between leveraging debt for growth opportunities and maintaining financial stability. Next, debt to equity ratio, where total debt divides the total equity. As mentioned before, total debt for 2022 is 0.4 and 2023 is 0.52 by dividing the figures as shown in the slides. Basically, in 2022, the company's debt to equity ratio was 0.4 and the company had RM0.4 of debt for every 1 ringgit of equity. With such a low ratio, it was clear that the company was mainly financed through equity and not debt. This indicated lower financial risk and greater stability, which investors found reassuring. The company was not heavily reliant on borrowed money, giving it a better chance to handle financial downturns or seize growth opportunities without taking on much. Last but not least, time, interest and ratio, which earning before interest and tax or EBIT divides interest expense. In 2022, the company demonstrated a robust financial position with a times interest earned TIE ratio of approximately 1 to 0.59, indicating it earned about 1 to 0.59 times more than its interest expenses. This underscored its strong capability to cover that obligation effectively with its earnings. Moving into 2023, the company's TIE ratio surged to about 176.48, showcasing exceptionally strong ability to cover interest costs, with earning before interest and taxes (EBIT) significantly exceeding its interest expenses. The company maintained a solid financial footing, bolstering confidence in its ability to manage debt and ensure financial stability.
Assalamualaikum warahmatullahi wabarakatuh. My name is Ahmad Emmanuel bin Ahmad Suhaimi. My matrix number is 2022-958-949. I will explain about the analyzed trends earning share, which is EPS. To find the EPS, we must divide the net income available to common stock and we divide the number of ordinary share issued. For 2022, the net income available to CS is 383,208 divided with 3,066,652. We can get the 1.045 and then we times with 100, we get the 104.5 cent. For each share, FN Neighborhood earns 104.5 cents. For 2023, the net income available to CS is 536,899 divided with 366,427. We get the 1.565 and then we times also with 100, we get 146.5 cent. For each share, FN Neighborhood earns 146.5 cent in profit that indicates greater profitability. Okay, let me explain first about the earning per share, EPS. Earning per share is widely used financial metric that indicates the amounts of net income earned by a company for each outstanding share of its common stock. It is a crucial measure of a corporate profitability and it is often used by investors to assess the financial health and performance of a company. The higher EPS generally suggests that a company is more profitable and thus more attractive to investors. For FN Neighborhood, the EPS has shown a significant increase from 104.5 cents in 2022 to 146.5 cents in 2023. This remarkable growth in EPS highlights that the company's earnings attributable to each outstanding share have increased substantially over the year. Hello and good morning everyone. Today I will be presenting the conclusion and recommendation based on the financial analysis of Fraser and Neff Holdings Berhad for 2022 and 2023. Alright, first we go to the key findings. Our analysis revealed notable improvement in FNN Berhad financial performance, but also highlights areas for further enhancement. Let's discuss these areas and our recommendation. For asset utilization showed a decline with turnover ratio dropping. To address this, we recommend reviewing asset performance, investing in technology and automating operation. This will maximize asset productivity and generate higher revenue. Next, we go to the inventory management. While inventory management improve, further optimization is needed. Implementing just-in-time inventory system and using data analytics to forecast demand and reduce holding costs and excess stocks, enhancing efficiency and profitability. Next, for the receivable management improve with the average collection period decreasing, strengthening credit policies, enhancing collection processes and offering incentive for early payment will improve cash flow and liquidity, enabling investment in growth opportunity. Next, we go to the cost management. To enhance cost management, we recommend conducting a comprehensive cost audit, implementing lean management practice, and eliminating waste. This will boost profitability and contribute to better financial performance. For the revenue growth is essential diversifying product offering, exploring new market, and investing in marketing and sales initiative will expand the customer base and increase revenue streams. This will drive long-term growth and financial stability. Last but not least, for the financial leverage, we must maintaining optimal financial leverage is crucial. A balanced approach to leveraging debt and equity will optimize the capital structure. Exploring low-cost financing opportunities while keeping the debt ratio manageable will ensure financial flexibility. So, in conclusion, FNN Berhad has made significant strides from 2022 to 2023. By focusing in these key areas, the company can further strengthen its financial performance, secure a competitive edge, and achieve sustainable long-term growth and profitability. Alright, that's all from me. Thank you for your attention.